Hello everyone. Welcome to the first video of Smartland Network. As I've said in one of my video, I was describing about my new YouTube channel. Which I said that in the first video, I will just give a brief introduction about commerce. Okay. So in this Smartland Network, as I've said that I'll be giving only academics video, which will be based on basically commerce, that is business studies, economics, and English grammar. So, first of all, if we need to understand commerce, then first we need to understand its areas or its subjects. According to 11th or 12th standard in commerce, there are three core subjects. These three core subjects subjects are your accountancy, business studies, and economics. Only these are the three core subject which is where commerce is based. Okay, but among these three also, the main important subject is accountancy. Accountancy is all about your accounting, the let's say financial statements, balance sheets, current assets, liabilities, trial balance, depreciations. These are the things that these are the topics that will be covered in accountancy. Okay, so first of all, very brief, if we need to understand, then we need to talk about what is accountancy or what is accounting. Okay, if I say about accounting, then accounting is a systematic process through which we calculate the or we assess the financial status of a company. Okay, so it is this accounting is a long process. Okay, and it does not involve only one step. Various steps are involved, like if we need to make a balance sheet for sole proprietorship business, then three processes are there. Okay, the three processes are, first is your first process is three steps are there. The first step is trading account. We need to make trading account where we'll cover the uh, where we'll find out the gross profit. Okay, then profit and loss account. Okay, where we'll calculate our expenses and our incomes. Okay, and finally we will get the net profit. Okay, or net loss. Okay, it doesn't mean that every time net profit will only come. Sometimes net loss also come. Okay, then finally we get our balance sheet. Okay, so if I talk about the if we talk about the in accountancy, if I talk about the various important terms. Okay, so first of all, it is entity. Entity means an economic agent or economic unit, which may be business entity or non-business entity. Okay, then your capital. See, capital, we, in our, in the business society, we, uh, we always uh, we always find a word which is capital. But what is that capital? Common people take this that as a money, only simple money. It's called capital. But in according to business, capital is the investment that we incur to run a business. Okay, it is the amount that we invest in our business to run it properly. So that is called capital. Okay, then drawings is nothing but the amount of money that we withdraw time to time from our business is called drawings. Then assets, yes, assets are those assets are those financial components of financial part that belongs to the proprietor. Okay, asset means which belongs to the proprietor. It is not someone else. It is asset. For example, your cash, furniture, then goodwill, then office accessories, these things, this all comes under assets. Now, types of assets are two types: current asset and non-current asset. Okay, current assets are those assets which are meant for sale within 1 year. Okay, or we can convert into cash. Non-current assets are the long-term assets which will not sell within 1 year. Okay, it will continue run. Okay, so some examples of current assets are cash. Okay, cash is the common example of current asset. And non-current assets are, let's say, computer, furniture, machinery, these things. Okay, apart from current and non-current assets, also tangible assets and non-tangible assets are there. Okay, tangible assets are the tangible assets are those assets which we can touch physically. Okay, example, computer, building, these things. Intangible assets are those assets which we cannot touch but we can feel those assets, like reputation, goodwill. Okay, liability liability are those things which does not belong to us, it belongs to someone else. Okay, that means we are liable to pay. Some more terms are there. uh, some more terms are there. Suppose the proprietor is the proprietor is the owner of the business. Then debtors, debtors are those person to whom we have sold our goods on credit. Okay, suppose Mr. A runs a business, he sold some goods to Mr. B on credit, so Mr. A is the uh, mr Mr. A is the debtor. Okay, sorry, Mr. B is the debtor because Mr. B is liable to pay. Then creditor are those person who gives credit to business. Okay, suppose there are two person, Mr. A and Mr. B. Mr. A runs the business, so Mr. A took some money from Mr. B on credit. Okay, that means what, Mr. B has given some credit, okay, to business, so Mr. A is the creditor. Then sundry means a group of people. Okay, sundry debtors, sundry creditors. Bills receivable and bills payable. Bills receivable means it is the amount to be received from debtor in future. Okay, this is the amount that we receive from debtor in future. Bills payable means the expenditure that we need to pay. Okay, we are liable to pay. So these are some terms in accountancy. So I'll make the video very short because if I make it too long, it does not get uploaded in my YouTube channel. Okay, this is a demerit, so I need to keep it here only. In the next video, I'll discuss furthermore, and very particularly, I tell you that from the next video I'll be focusing on only business studies and English grammar, because because as I've already told in the previous video that I'll only teach business studies and English grammar. Thank you.